Hello, investors and traders, and welcome to the Midweek Report. I'm AJ Monte, Chief Technical Analyst with StickyTrades, and we have about 2.5 minutes before the market closes. Before we get into the details, I just want to point out the minute-by-minute chart on the Dow. You can see here that we have been trending upward throughout the entire day today. And as we get ready to close, you can see we just have about 2.5 minutes to go with two little slivers of a candle getting ready to show up there. So in the Dow, we are seeing more buying pressure coming in than sellers. And so with that said, I still believe that we're going to head lower down towards this target. So I'm not moving that target at 379.61. I'll show you why in a moment, why I'm still keeping that downside target. If you look at IWM, you can see that the small cap stocks have already pivoted lower. And you can see that we are just a hair away on the CCI down there from crossing with a sell signal. So I think that too will start to propel the rest of the markets lower. Even though these are the small cap stocks, they do have an impact on the rest of the markets as we start to see red showing up in this market right here. So that downside target's still in place at 198.95. I just want to make something very clear. One of our viewers on YouTube pointed something out, stating that my target more or less was not hit by May 7th. And what he was looking at, I imagine, I haven't gotten any answers back, but I hope I do. If you look at the data box down there, you could see 198.95. That's my downside target. However, the date is irrelevant for me. I don't pay much attention to that date. What we do is that's the data box, and it puts that in there automatically. If you notice, my target lines from here, so this was an upside target that was hit, downside eventually hit. See the angles of the upside and downside? What I do is I more or less duplicate the angles, and I try to also duplicate the duration of those up and down legs. So that data box is, I'm focusing on the price more than the date. Now the date does help for option traders who want to properly position themselves with expiration times that might match up. So the markets are getting ready to close right here. And there we go. The markets are officially closed. If we look at QQQ, which is the tech sector, you're going to see, again, you're going to see the oscillators down below, a hair away from a sell signal right there on the CCI with a full-fledged pivot. Let me magnify that for you. A lower high and a lower low is what defines a downside pivot. It's like an inverted V right there. Upside pivots are the opposite. Obviously, we'll have higher lows, higher highs. If you have a higher low and a lower high, then that would be a half signal. I'm not going to get too far into that, but there's a difference. A half signal is half of a pivot. And in this case, again, it's a full-fledged pivot. So I'm still keeping my downside target down there, 425.73. We have an open gap down below the market on the Qs. You can see we did turn negative today and stay negative for most of the day. So the Qs are still intact to the downside for my targets. Looking at SPY, and then the VIX is coming up, so stay tuned. You can see, again, we have a pivot. Lower high, lower low, on lower volume. See the volume dropping on the way up is bearish, and we are a hair away from crossing the CCI sell signal. I do believe that most of the markets are going to see that sell signal come up tomorrow, perhaps maybe by Friday, but next week I'm most likely going to keep these targets in place. For SPY, the downside target is 501.22. And the reason for that, and here we go, looking at the VIX, is that today, look down below, we officially filled that downside gap. So we can mark that off on our checklist. Now that gap is filled, and what we're expecting now is a rally back up on the VIX. I'm going to give you a 100% guarantee. Here we go. 100% guarantee that this gap right here, now that gap would be filled at 1460. 1460. I'm giving you an absolute guarantee that that gap will fill. And I can do that because the VIX is an oscillating index. It's not a stock. But that's great information for those who trade the VIX, whether you're looking to trade VXX or you could even participate in the Russell 2000 RWM. You could do that too. But that is going to fill eventually. I can't give you the exact date, but that will fill. And then I think we're going to start to rip up. I'm keeping that upside target of $18.38. If you look at the high-low list, the Wall Street Journal high-low list, I'll give you a link to this in the description box below. You could see that the NASDAQ had 97 new 52-week highs. But if you go down and look at the number of lows, I got to scroll down here, there's 85. So it's almost evenly matched, right? During the course of the day, we had many more lows than we had highs. But what that tells us is that towards the end of the day, a lot of these stocks bounced off their 52-week lows. Tomorrow could be very much a different story. Again, I'll leave the link so you can track that during the course of the day. I'm going to mention one other thing. Again, I rarely do this, but I'm pointing out SVRA. I sent this out to our members. I've been trading in and out of SVRA ever since I got out of 25% of my SLV position. If you follow me on X, you'll know that I make my SLV positions and my trading very public. And I'll let you know when I'm back into SLV. But while I'm sitting in some cash from the sale of SLV, for every one share that I've sold in SLV, I've been buying 5 shares of SVRA. So it's more or less a 1-to-5 ratio. And I've been trading in and out of this, doing extremely well. And today I sold out of my entire SVRA position to take a profit. Why did I do that? Well, first and foremost, you see this bearish harami. And secondly, look down below. We're about to cross with a sell signal on the CCI, and it closed below $5. So if the price continues to drop any more from here, you're going to see some additional selling in this stock because the margin requirement changes once it closes below $5. So in other words, the brokers require more of a margin requirement to trade a stock under $5. So what happens is most people, instead of bringing in money to satisfy the margin requirement, they would rather sell the stock. So I'm selling out and I'm looking to buy back in. I'll try to keep you up to date on when I get back into this one. I can't guarantee you because I'm busy during the course of the day. The SLV is something I make extremely public because there's so many people that trade in and out of silver and gold that they like to keep track of me on X. So I'll try my best to give you an update on the midweek report or the weekly market report when I get back into SVRA. Remember, tonight we have the rapid fire stock analysis session from 6 to 7. If you're interested, go to StickyTrades.com. You could sign up as a member, plug in, and you could watch me analyze up to 70, maybe 75 stocks tonight. I did 80 last week in 1 hour. And just about half of those targets in 5 trading days, half of those targets have already hit. So what I do is I go through rapid fire succession to analyze stocks, put targets brought to me through ticker symbols as submitted by the audience, and I analyze them. We document it. We have a great track record, and I hope to see you there. Thanks for liking, sharing, subscribing, all of that good stuff. We're gaining members thanks to you sharing and posting on your social media pages. We really cannot thank you enough. You're helping us so much, and I greatly appreciate it. Have a good rest of the week. So long.